Good morning to all of you. We will just wait for 1 or 2 minutes till others also join because we have only about 25 participants here at the moment. Just 1 or 2 minutes. All right. We shall start now. I am Dr. Mangal Fonseca. Good morning to you, all of you. Professor Lakshman R. Vatvela, President CMA. Natasha, Miss Natasha Kaumadi, resource person, and my dear participants. I hear that there are about nearly 40 participants registered in the program. On behalf of CMA, I welcome warmly to this program. Just a moment, please. Yes. Cost accounting for professional effectiveness. It is often said that cost accounting is fast becoming it's a fast diminishing discipline. Forgetting. People forget cost accounting for cost accounting. It's overtaken by other more sophisticated disciplines such as management accounting, then strategic management accounting, as well as various other subjects related with some kind of relation to information technology. So in this wilderness of highly sophisticated sort of subjects, we tend to forget cost accounting. But after all, we should remember that it is the mother of all these disciplines. It's the basic. It's the foundation. But if we don't have a very firm idea, firm notion about the basics, we are bound to be failures. So it seems that we are building stories and stories, but with a very poor, weak foundation. Well, for example, what is the cost? What is the cost of a product that you make? Or what is the product? What is the cost of a unit cost of a service that you offer. I tend to feel that we are very weak in deciding on that, which is so very necessary in becoming competitive. In order to achieve competitive advantage, we certainly have to know, we certainly have to be very, very sound about cost accounting. So we see that we have to a very large extent, we have forgotten cost accounting. And in this context, Professor Vattavala and CMA has decided that we should give a we should refresh the knowledge of people, mainly even accountants, our own members, who have forgotten or who have not paid much attention to cost accounting. So there is a big gap here where cost accounting should be brought to prominence once again. So it is with that notion that last year we started this program. We developed this program to include the essentials of cost accounting. As you know, it's a short course, runs over 6 sessions with a very good, very sound theory and practical aspects. Theory is extremely important because theory is based on good practice. But over time, theories change and new theories emerge. So it's important that we know our theory as well as practical aspects. And with that intention, our program consists of a good blend of both. It's conducted by two renowned, well-known resource persons from the University of Sri Jayawardenepura. So with these opening remarks, I shall now invite Professor Vattavala to say a few words about our study program.
Good morning to all of you. We have Professor Mangala Fonseca, who's a consultant to the CMA, and also our lecturer, Ms. Natasha Kaumadi, who is with the University of Sri Jayawardenepura, and also our senior director, Ms. Shanti Maheswaran, together with all the participants who are here. So on behalf of CMA Sri Lanka, I am indeed pleased to welcome you to this course on cost accounting for professional effectiveness. I think this is one of the CPD or continuing professional development programs that we are organizing for the benefit of members and others who wish to gain a knowledge or to upgrade their knowledge in different aspects, and of course to get sufficient skills as mentioned by Professor Mangala Fonseca. First of all, I must thank Professor Mangala Fonseca because this is the second batch that we are doing on cost accounting, and also associated with him are the two resource persons who are really experts in their fields, Ms. Natasha Kaumadi, who's a lecturer at the University of Sri Jayawardenepura, accounting lecturer, and also Professor Dr. Nuwan Gunratna, a senior lecturer in accountancy at the University of Sri Jayawardenepura. So both of them are very conversant with cost accounting, and also they are members of our association, the CMA, and also they have the other relevant qualifications which will amply make them eligible for providing the knowledge to all of you. So I must first thank them for preparing the course material together with Professor Mangala Fonseca for this course and then doing it. So this course really, when you say professional effectiveness, it has a context of practical work. Because if you really, as Professor Mangala Fonseca mentioned, if you look at the management accounting profession, they are really operational professionals. Operational management and staff who help the management in conducting and running the day-to-day activities of their organization. Now, that's one of the most important things of a management accountant because you are involved in the internal operations, whereas maybe financial accounting may be mainly for the external stakeholders. But we are really in that area, and that is why we set up the management accounting body. And one of the areas of specialization in our management accounting is cost accounting. Management accounting was initially formed on cost accounting during the industrial revolution when they found that the industries were coming up and that they needed the cost accounting profession to support them, to make them efficient, make them effective, and of course, the most important thing, to make them more profitable. So this course will really and will enhance your practical cost accounting skills for professionals. Because what we find today is everyone is saying prices are high, costs are going up, but we don't have the specialized managers or professionals who will be able to tell the reason as to why these are going up. Because that's the very reason that you really need cost accounting, because then you can analyze what goes into the cost of a product or a service. Then only you can take a decision. A lot of the decisions that are taking today are going, as the IMF has suggested, on a total cost recovery basis. I think the IMF ruling is to really recover their money and to ensure that they will not run at a loss. But you will see that in a competitive industry, if you go on this cost recovery basis, you are definitely going to lose. Because if you apply that principle to Sri Lankan Airlines, the next day they will have to close down because their prices will be so high that they will not be able to exist. So that's why today we have a very good batch of professionals and senior managers. Many of them who are our members also. I'm very, very proud that we are having so many of our members here, because you are the real uh, torch that will take the word of cost accounting, because all of you who follow this course, after 6 weeks, when you go back to your institution or organization, you will be able to really make a major contribution. And then that will also, where the others will also want to find out, how did you get this knowledge? Because we are looking not only the giving you the skills, but also your career advancement. Now, when you are able to do something better than the others, definitely you are sure that you will be able to catch the eyes of your senior directors and others and then go up the career progression. So that's one of the key areas that we thought that we should do this. But there are, of course, various important topics that are covered in this course, which I think will give you a very good knowledge of what this cost accounting is. Sometimes you might be doing this, but you may not be doing it in a professional way. But if you do it in a professional way, how your decision making, how your efficiency, and the profitability of your organization will improve. So these are some of the important elements of this course. So that's why I'm happy that Professor Mangala Fonseca said that almost 40 have registered. So that shows the number that have registered also is good. The other thing, of course, is today we are able to make use of the online facility, the digital means, which is also convenient to you, where they say maybe you can study at any place, any time. So these are uh, things that have been brought in as a result, and we are really practicing that in a long way, even for our students, where we have the computer-based testing. We were one of the first professional bodies to do that. We are members of the International Federation of Accountants, the global body for the accounting profession. So as a local body, we now have been able to get the global recognition. If you look at the Chartered Accountants, if you look at ACCA, CIMA, they are all members of the International Federation of Accountants. So they are all in the same league, but we want to have a professional who is maybe much more better than the others, and also can play a major role in their institution, which will really take the management accounting profession forward. So this really will improve the financial health. As I said, if you are able to maybe give decisions, if you are able to work out the marginal cost of products, to analyze the costs, maybe to better pricing policies, these are areas that one would really appreciate, because today it's value creation. We conduct the CMA Excellence in Integrated Reporting Awards, where most of the major corporates, the quoted companies are applying, and they are really showing the value that they are creating to its stakeholders. And you must also realize that today, earlier we were thinking only on the managerial costing area, only the internal area, but today we are also looking at the society, the societal costs. Now, when I talk of the electricity industry, any inefficiencies, any wastages, any corruption, all those have to be met by the society. So that's why now we really made certain recommendations to them, the importance of cost accounting. And I'm happy to tell you that in their final report, the Public Utilities Commission of Sri Lanka have recommended that they should maintain cost records. They should do a cost audit. Actually, cost audit is a compliance statement to show that they have done it the correct way, and the society will get the best price. So these are the same thing that you should think of your own organization, because definitely I know that in many organizations, many of the public pricing that is done, they really don't have a way of how to do the costing. So we are now coming up with what is called the cost accounting standards. We are also coming with the generally accepted cost accounting principles. And if you are really interested, certainly you can join. We are going to have a cost congress, which will really speak on the importance of costing, the pricing of mainly the services the government is providing, maybe like the electricity, the water, the telecommunication services, all these, where we need proper costing. But in your own organization, please see that you have proper cost records, because that is the basic area, basic method by which you will be able to arrive at it. So this cost records is very important, either maybe in written physical form or even on electronic way. The cost record should be maintained, which will really enable you to gain a added advantage over the others. So as I said earlier, this is really a management process, internal decision making, which will support your business organization. So you all are really the key people in any organization, which will be able to give proper decisions. You'll be able to suggest various methods by which the company will be able to be more effective, more efficient, and of course, all of them are looking at the bottom line, where it can be profitable, plus also where when we go to the society, you will be able to give them a product at a competitive price, a very competitive price, which is affordable to them. That's something that we need to look at. So I'm once again, let me thank you all for coming for this. I'm sure our very eminent lecturers, I think Ms. Natasha is there, and also Professor Mangala, Professor Dr. Nuwan Gunratna, and of course, under the guidance of Professor Mangala Fonseca, they will really take you through everything. And as I said, they will also bring in certain practical aspects. They will invite maybe certain people from the industry who will be able to tell as to how they have got it. And also, I found that at the end, in addition to giving a certificate, they want you to give a maybe like a case study, which you can do at your institution, because this is the way that you really learn, because the case study is a very important thing. And if we have had a lot of interaction with the Indian Institute of Management, IIM Ahmedabad, the first management body that came up in India, and one of the leading ones in the Asian region and even globally. So they with their connections, we've been able to see that this will really be beneficial. I'm sure Ms. Natasha is smiling because she knows the importance of these things. And of course, Professor Mangala Fonseca, who's been one of the senior lecturers at the University of Sri Jayawardenepura. In fact, he did a survey long time ago, I think that was done maybe 40, 50 years ago or 40 years ago, and about the management accounting practices in companies. And they found that the importance of this has really not been seen. So that's why now when this our management accounting body was set up, the government realized the importance of management accounting. That's why they incorporated it by an act of parliament. Because these are the powers given to our body by act of parliament, which also enabled us to get the global recognition. So you can see how these things work. We have to, of course, have the experience in this. We have the dedication. We have to get your involvement in this, because ultimately you are the one who will benefit, your organization, and of course the country as a whole. The economic expansion, the economic development really rests in the hands of the management accountant, because you can really give the proper advice to see that all these institutions are running efficiently, effectively, and of course profitably. So thank you very much for enrolling for this course. And I must also, as I said earlier, thank Professor Mangala Fonseca, Ms. Natasha, and of course Dr. Noan for their contribution they are making to CMA, and also to the professionals and others who really want to get a knowledge of cost accounting. So thank you very much, and I wish you all the very best.
Thank you, Professor Vatawala, for those useful inputs given, as you always do. Now it's my pleasant task to introduce the two resource persons. First, Mrs. Natasha Kaumadi, who is from the department. She will act as the course leader. And she is from the Department of Accounting, University of Sri Jayawardenepura. She possesses an MBA from PIM, Postgraduate Institute of Management. She is an ACMA, ACA, as well as CIMA UK, a past finalist. She's a communicator by excellence. And also, she has experience in the private sector. So I'm sure you will find a very interesting and a very, although young, an excellent resource person in her. She will be joined by Dr. A.D. Nuwan Gunaratna, a well-known personality in the academia at present. She has a PhD from Griffith University, Australia, and an MBA from Postgraduate Institute of Management. He's a FCMA, ACMA UK, and ACIM. A well-known researcher, as well as an excellent communicator by excellence. You will get to know them better as they deliver the course. I trust it will be Ms. Natasha Kaumadi who will take the session today. I will be failing in my duty if I don't give a big thank you to Mrs. Shanti Maheshwaran for her tireless efforts to get this program going. This is the second program. we have had a smaller number last time, but I'm sure the quality of the program may have increased the numbers in this program. And I have no doubt the program will go from strength to strength because of the type of uh, program that we deliver over the 6 weeks. I also should tell you that there will be about 4 sessions where some people, some resource persons from industry will participate, interactive sessions, where they will give their experiences as to how the theory works in practice, where you can interact, ask questions, etc., etc. So wishing you all the very best in the study program. Over to you, Natasha.
Thank you very much, sir. So, good morning, everyone. Am I audible? Can you please confirm?
Yes.
Yes, thank you very much. Right. So, as Professor Vattavala and also Dr. Mangala Fonseca mentioned, welcome you all to this course conducted by CMA Sri Lanka on cost accounting for professional effectiveness. I will first go through the course outline. I believe that you have some kind of understanding about the course now, but before moving on to today's first session, I will go through the course outline and then we'll directly go to the session as the time is ticking. Right, so let me share my screen. Right. Okay. So I will first share this document with you all once I go through the document today. Basically, the introduction, I'm not going to read every sentence, but now you understand this short course is about cost accounting. We will be discussing the fundamentals in cost accounting, what are the new trends in cost accounting, and what the importance, how you are going to apply these techniques, methods in your organizations. Likewise, we will be discussing mainly about the cost accounting principles and all. And also, the objectives are there. I'm not going to go through all these objectives and learning outcomes, but I will show you the course structure. I think that is important. So as you already know, we are going for 6 Saturdays, 6 days, 3 hours per week. And or total, we have 18 hours for this short course. And we have arranged the topics like this. As you can see, today we are going to cover introduction part, introduction to cost accounting, and then cost terms and classifications. That is the coverage for today's session. And then the second session, it will be about costing methods. That will be job costing, process costing, what are the fundamentals you need to know, how you are going to apply these costing methods in your organization. And most importantly, as Professor Vattavala and Dr. Mangala Fonseca mentioned, we have invited industry experts, professionals from the industry to share their experience, what is happening in their organizations. So we have one industry expert coming for the second session. Likewise, session 3, it's about cost assignment, and another industry expert will be coming on the third session as well. That means third Saturday. And then session 4, we will be discussing about budgeting. How to do a budget, what are the fundamentals, what are the types of budgets, what are the things you need to know when you are preparing a budget. Likewise, budgeting principles will be discussed along with an industry expert. And then session 5, pricing and CVP analysis, cost volume profit analysis, the break-even points, profitability and everything. And then session 6, that means the last session, that is about standard costing, and another, our final industry expert will be coming on the session 6. So that will be our session plan, right? So you have kind of understanding what are the topics we are going to discuss, and the industry experts are coming for 4 sessions out of the 6 sessions, right? And then this is a detailed outline what are the small topics, subtopics we are going to cover under each session. I'm not going to read these things, but I will share the document with you so you can get a clear understanding what are the aspects we are going to cover under each session, session 4, 5, and 6, likewise. And then, as we discussed previously, as Dr. Mangala Fonseca also mentioned, we will be giving you an assignment at the end of the course to give you a certificate of completion, right? So in order to do that, I will be sharing a separate assignment guideline document with you, maybe next Saturday. But just to tell you what is the thing you need to do in that assignment. After learning all the cost accounting techniques and all these methods, you need to explain maybe within 1,000 words or 500 words. I will exactly tell you the word count as well. What are the sections? How you are going to apply these techniques, how you are going to apply these methods in your organization. That is important. And when you are trying to apply these things, what are the challenges you might face? Likewise, a synopsis of what you have learned in this short course. You have to submit that document at the end of the course. So that will be the assignment for you guys after the completion of the course. And upon that submission of your assignment, we will be issuing the certificate of completion. So that is the course outline. So now I think you have good understanding about the topics we are going to cover and then the assignment and all. So if you have any clarifications, if you have any doubts, you can ask. You can unmute yourself. You can use the chat box. I want to have a very interactive session, right? Not just listening what I'm going to say and or not focusing. So even though this is an online platform, we have to be interactive. You can talk, you can unmute yourself, or you can use a chat box throughout the sessions, right? So if you have any doubts, you can ask now before we move on to our session.
All okay.
Okay. Yes. Any doubts?
No, all okay. Thank you.
Right. Okay, so hope you don't have any doubts, but remember, I want to have a very interactive session. You can always talk, you can always put your questions, and maybe you use the chat box as well. Right. So with that, we are moving to yes. Exactly. Yes, I will share the documents and then you will be able to go through the documents before you come to the session. Yes, that's great. I will do that. Okay. Likewise, you can always request the documents and I will share the course outline with you also. Right now, our first session, that's about essentials of cost accounting. Basically, the fundamentals you need to know when you are learning cost accounting. Basically, I can't use the word learning cost accounting. As I saw the profiles of you, most of you are members of CMA. So, or even if you are not a member of a CMA, you have learned these things before, so you can refresh your memory, you can refresh your knowledge on cost accounting and then add different new things into your knowledge as well. So we will be discussing about the essentials today, and there are two parts in this session. Part 1 is about introduction to cost accounting, right? And then session objectives, what are the things you are going to achieve at the end of this session? Identify the purpose of cost accounting, and then to explain the difference between cost accounting and management accounting. Now, if you're listening to Professor Vattabula, he also mentioned cost accounting and management accounting are two things, but there's a difference, but there's a relationship, close relationship as well. So what is the difference? What is cost accounting and why there's management accounting as well? And then what is the difference between like cost and management accounting with financial accounting? We have financial accounting as well. So what is the difference? And then understand the IT adoption in cost accounting. Now, IT, information technology is a very important thing in any discipline nowadays. So what is the application of IT in cost accounting? And then the role of cost and management accounting within an entity. So these are the things you are going to learn at the end of this part 1. Right. Moving on. So before we discuss, I have a small survey kind of thing using Mentimeter. You can use your mobile and scan this QR code now. I want everyone to do this. And if you find it difficult, I will post this link in the chat box. So you can click on this link and yes, I hope you got the link. Can someone please confirm whether you have access to that Mentimeter survey? You can you can use this QR code. You can scan this. This one. Yes, thank you very much. It's working, right? Okay, now you have access to I will show you the questions as well. You can you can answer the questions, and at the same time, I will show the questions as well in the screen. All right. So the first question is about which of the following best describes your current employment status? Yes, I want every one of you to answer. So there are maybe if I remove myself, there should be 31 responses. Yes. Okay, we have full-time employed. Most of you, majority of you are full-time employed. This is just to get an understanding about you, actually. I have the profiles. I have gone through your profiles, but you also can see the batch, right? The variety of the batch you are in. Full-time employed, most of you, and there are 2 students as well or recent graduated. And there's 1 part-time employment as well. That means 24, 5, 6, 7, only 27. Right. We'll see. Okay. Which industry do you currently work in or most related to? Okay. I can see now, you also can see the answers. Banking. There are more professionals coming from banking industry, banking and finance, of course, banking and finance sector. Okay. And tea manufacturing. Okay. Insurance, tea production and export, black tea processing. Okay. Interesting. So you can share your experience, especially in tea manufacturing, and then construction, services, and retail industry, BPO, textile, engineering consultancy, IT and water treatment, home and personal care, finance. Yeah. Recruitments and headhunting, tea exporting. Very nice. So manufacturing and banking, these are the highlighted words, as you can see. So many coming from the banking industry. Manufacturing, that's great because we have a combination of manufacturing as well as service providing. That's great. Okay, I'm moving to the next question. Thank you very much. Which best describes your current job role or functional area? I have few categories for you. Finance, accounting, auditing, that means the finance professionals, operations or production, engineering, and then marketing, sales, and then HR, IT, data, systems, and then entrepreneurship, or a student, and other. Okay, other. Can you please enter in the chat box, or uh, yes, maybe put that in the chat box. The job role of this other one participant is there in other category. What is your job role? You can unmute yourself anytime, but finance and accounting. So you can, okay. So as you can see, most of you are in the finance and accounting section, right? That's great. But there are entrepreneurship, general management, student, and then operations aspects as well. So don't worry, we will be covering the fundamentals. And top of that, we will be discussing the other things. Right, I'm moving to the next one. Are you currently engaged in cost or management accounting activities in your organization? I won't like directly, yes, it's part of my main responsibility. That means you are engaged in your daily working with cost and management accounting stuff, or not directly, you are not directly preparing or engaging with cost or management accounting, but you are using the reports for decision making, not directly. And some of you, no, you are not engaged in cost or management accounting. You have to learn these things. Right. Okay. So most of you, now it's a 13 out of you are directly involving, but indirectly, not directly involving, our people are also there. Okay, that's great. I'm moving to the next one. Okay, right. So those questions were just to get an understanding about you. That is easy for me, right? Now I found that most of you are coming from banking and manufacturing industries. And likewise, I got to know about you. That's great. Thank you very much. Now with these questions, we have, if I'm not mistaken, there are 7 questions. This is just to test your knowledge, right? This will, I will give you the correct answer as well. This is to test your knowledge. Cost accounting is primarily aimed at what? Cost accounting is primarily aimed at tax reporting, internal decision making, auditing, or external financial statement users. What is the most suitable answer? Most suitable answer. Now, most of you have said, as correctly said, internal decision making. Cost accounting, we'll discuss these things. Cost accounting is for internal decision making. Auditing, it is there, right? Auditing, for auditing, we have to provide the information. Auditors are coming and doing the audit of all the transactions in the organization, not all sample-based transactions in the organization. But cost accounting is primarily aimed at not auditing, for internal decision making, not to external financial statement users, but for internal decision making. That's the correct answer. Majority of you have said the correct answer, right? Second question. Which of the following is not a cost classification? Which of the following is not a cost classification? Okay, interesting. Which of the following is not a cost classification? Sunk cost. You will learn this today as well. It is a cost classification. We have so many classifications of cost. We have different types of cost classifications. We are going to discuss those things today. And sunk cost is one classification. Variable cost, as you have correctly mentioned, that means any one of you have not selected variable cost. That means, obviously, yes, it is a cost classification, variable cost. Look at opportunity cost. Opportunity cost is also a cost classification, one way of classifying cost. But balanced cost, there's no cost classification as such. Balanced cost. So that is the answer. We don't have a cost classification called balanced cost, right? Okay, good. Moving on to the next one. Cost accounting is only useful for manufacturing companies. True or false? What do you think? Now we have Now with the first few questions, we understood there are participants coming from several industries. So I'm saying cost accounting is only useful for manufacturing companies. That means cost accounting is not useful for service providing companies, banking, insurance, consultancy. What do you think? As majority of you have said, it's false. It's not only useful for manufacturing companies. It is important for all the organizations, any organization, right? Okay, so it is important. Cost accounting is important for any organization. Which of these is a recent development in influencing cost accounting? What do you think? Which of these is a recent development influencing cost accounting? Paper-based filing, manual ledgers, or blockchains? Recent development? Paper-based filing, manual ledgers, both are traditional, right? They are traditional methods. Traditionally, years ago, we were using paper-based filing and then manual ledgers to record the cost information, to record the transactions, to record the numbers. But now we have, with the advancements in information technology, we have AI, IoT, machine learning, blockchains. So the blockchain is the correct answer. That is the recent development. That is one of the recent developments, I would say, coming from all these information technology advancements. So blockchain is the correct answer. Next one. Financial accounting must follow set standards. That's true, right? Financial accounting has standards, accounting standards, SLFRSs, IFRSs, right? But cost accounting is also standardized. Cost accounting is governed by law, or cost accounting is customizable for internal use. What do you think? Standardized means, do we have standards, accounting standards as such for cost accounting at the moment? Is that standardized as financial accounting, or is it governed by law, or customizable for internal use? What is the correct answer? As you have correctly mentioned, majority of you, it is customizable for internal use. Now, for financial accounting, we have accounting standards, that is world recognized accounting standards. We have to follow those accounting standards when we are reporting, when we are preparing the financial statements. But when it comes to cost accounting, preparing the cost accounting reports and all, we don't have accounting standards as such at the moment. There will be future developments, but we don't have standards as such. So we can't say cost accounting is also standardized, right? It is not governed by law, but it is customizable. Any organization can customize their reports, the way they prepare, the way they present the information, so they can customize for internal use. That is the correct answer. Good. Okay, interesting answers. What are the recently introduced sustainability related accounting standards? Now, I know this question is not about cost accounting. This is about financial accounting, right? But I just wanted to ask this question. Now, so many sessions are there, so many discussions are happening outside regarding these two accounting standards, sustainability related, newly introduced accounting standards. Like companies are going crazy with these accounting standards because implementation is compulsory for top 100 listed companies in Sri Lanka from the 1st January, right, 2025. So they have to implement these accounting standards. And for other organizations also, there are deadlines. They have to introduce these accounting standards. So these are financial accounting, financial reporting related. Okay. So the answers are IFRS S1 and S2. IFRS S1 and S2. Green, SLAS, Green Bond Investment, ESG, Value Add, Waste Management, Green Bonds, Utilities, Solar. Still the answers are coming. What do you think? What are the recently introduced? Two sustainability related accounting standards. Yes. Now, the answer is S1 and S2. SLFRS, S1 IFRS, S1 and S2. Those are the sustainability related accounting standards introduced recently in the world as well as in Sri Lanka. Okay. So those are related to the presentation, disclosure of sustainability related information in financial statements, in their basically annual reports, right? The answer is SLFRS or IFRS, S1 and S2. Remember, just for your understanding, okay? Now, waste management. Most of you have said waste management. That's why I'm wondering. It's not directly related to waste management. There's a broader aspect covered in SLFRS, S1 and S2. But I have the correct answer as well. That's great. SLFRS, S1 and S2. Now the next question. That's the question I actually ask. What is the impact of these introduced accounting standards on cost and management accounting? Now I told you S1 and S2. Now if you are working in a public listed company, S1 and S2 is there. But even though you are not working in a public listed company, doesn't matter. You have to understand the new developments. S1 and S2 is there. Sustainability related accounting standards. That means when organizations are operating, they are working, like they have an impact on the environment, social aspect, and then environmental aspects. So these organizations now need to report the impact of their operations on the environment or on the society in the annual reports, basically. That's the understanding. Now, my question is, now what is the impact of this scenario on the cost and management accounting? What is the impact? Yes, to understand the total cost, example, financial cost, social cost, environment cost, good. These standards shift companies from focusing solely on financial metrics to a more integrated approach that balances profit with long-term environmental social responsibility. Great. Standard on how to manage cost management, disclosure of sustainability information, calculated the correct costing. It is an additional cost and how those are managed. That's good. Yes. Efficient utilization of resources meets compliance requirements. Reporting complexity and cost will increase, particularly in how companies approach and disclose sustainability and climate risks in relation to financials. Okay. Thank you very much. I'm getting answers. That means you have some kind of understanding. That means now sustainability has become very important nowadays. And with the introduction of S1 and S2, sustainability has become more important in Sri Lankan context as well. Now, top companies, they are talking about sustainability, how to do better with society, how to do better things to the environment, how to reduce the negative things they have done to the environment, society, and all. Why? Now they have to report, right? There will be many sustainability related accounting standards coming, right, into the organizations. Now, when it comes to cost and management accounting, first of all, when there are transactions, when there are operations happening in an organization, you have to report, right? You have to report these things. Internally, you have to trace the transactions, you have to classify the transactions, and then you have to record the transactions. It can be a purchase, it can be a sales, it can be an expense, it can be production of your products or services. But when you are talking about sustainability, S1 and S2, you have to have all the information related to sustainability recorded in your organization. That means if I mention few examples, you will have to do accounting for materials used in the organization. You will have to do accounting for waste in your organization. Waste means what is the monetary value of that waste, what is the physical count of that waste, both. You will have to do accounting for water use in your organization because S1 and S2, those are the basic sustainability related accounting standards, but there will be future sustainability accounting standards coming. You have to record everything. What is the consumption of water? What is the monetary value? What is the consumption of materials? What is the natural? What are the natural extracts used in the production? What is the impact on the environment? You will have to do accounting for energy consumption, right? Energy. What are the types of energies you have used? Renewable sources, non-renewable sources. What are the quantities? What are the monetary values? So energy accounting, water accounting, material accounting, waste accounting, not only that, biodiversity accounting. Likewise, so many aspects are coming into play with these new sustainability related accounting standards. I hope you are clear. If not, just ask questions. So I'm saying there are new aspects coming with this sustainability. Now, all these aspects you have to cover under cost and management accounting because that is for internal decision making. Even though these information details are reported in the financial, that means the annual reports, cost and management accounting aspect is very important. You will have to have procedures how to trace the water consumption, how to quantify the water consumption, how to monitor get the monetary value of the water consumption, energy accounting, water accounting, material accounting, waste accounting, biodiversity accounting. Likewise, there are so many aspects coming into cost and management accounting. So the cost and management accountant is responsible for putting the procedures to trace these information, to report, to get the cost information accumulated into one report. Likewise, so many things are there. So that's why even though S1 and S2 are related to financial accounting standards, cost accumulation, cost tracing, cost classification, everything is related to cost and management accounting. That's why when we are learning management accounting or cost accounting, you need to know the new things coming into play, not just recording the cost of a product or cost of a service. You have to think about water accounting, material accounting, biodiversity accounting, waste accounting, and everything. So these are the new developments happening in this area. Any doubts? Are you clear?
Yes.
Okay, thanks. Yes, if you have any doubts, you can ask questions, right? Okay. So I want to have, that's why I told you, you guys are professionals, you are working, you have experience to share. So I want you to share your experience. Maybe now you might know more things, right? Compared to me when it comes to practical applications. So you can share your experience and ask questions. That's great. Thank you. Okay, so that's what I actually wanted to discuss to give you some kind of understanding, the basics. We had some basic questions about cost and management accounting, and then the new developments, right? These are the developments in this area, and you need to know these things. Maybe you can use AI, you can Google these things. I'm pretty sure you guys are using AI, ChatGPT, Gemini, or anything Copilot. You use these AI tools to learn these things, to search these things, rather than just Googling. Googling is also important, but you get very specific answers with examples, with elaborations when you use AI tools to learn these things. So you can just type water accounting. What is water accounting? What is material accounting? What is waste accounting? Likewise. So you will get examples and all. Likewise, you can learn, right? Okay, now at the end of the Mentimeter, session, I will go into my slides again. Right. So I have the same questions in my slide as well. Right. Okay. Now we'll be starting the first slide. Now, we are talking about cost and management accounting as we discussed. And then as a definition, I don't want you to remember this definition. Just to give you a definition for accounting. Now, there are so many definitions for accounting. And then one I took from the American Accounting Association, one famous definition for accounting. It is about identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Basically, accounting. Now, most of you are working in the accounting field. That's why I'm mentioning. We are recording the transactions, we are classifying the transactions, we are preparing reports to make decisions. Basically, no point of preparing a report if you can't use that report for any decision-making purposes. Right? So in order to make decisions, you are giving information to those intended users. That's what accounting discipline does, right? That is the basic definition for accounting. And then when it comes to main users, now who are the users of the accounting information? We have two categories: internal users, that means within the organization, and external users outside the organization. A very simple question. Who are the internal users within an organization? Who are the internal users? You can unmute or you can use the chat box. Who are the internal users in an organization? The management, of course. Okay, the management. Internal users within an organization. Shareholders, or yes, managers, employees, managers, owners. These are the internal users: owners, managers, and employees. These are working in the organization, within the organization, right? And one small mistake, if I just correct, don't use the word stakeholders. It can be a spelling mistake as well. Stakeholders are internal and external, all the interested parties, stakeholders, right? If we say stakeholders, it talks about everyone, internal and external stakeholders, all interested parties. So it can be shareholders, it can be internal parties, shareholders, because owners, employees, and managers. Who are external parties? Who are external parties outside the organization? Customers, competitors, yes, regulated bodies, government, society, public environment, suppliers, all these are banks and financial institutions. All these are external parties outside the organization. Right. Another question. What are the two main branches of accounting? What are the two main branches of accounting? Two main branches of accounting. Yes, financial accounting and management accounting. Financial accounting and management accounting. These are the two main branches. Now don't look at cost accounting. I will tell you. Financial accounting and management accounting. These are the two main branches. My question, financial accounting aspect mainly focuses on internal users or external users of information. That means internal parties or external parties. What is your answer? Financial accounting, mainly. I'm not asking overall. Financial accounting mainly focuses on external parties or internal parties. What do you think? Yes. financial accounting mainly focuses on external parties, right? Mainly focusing on the external parties. I will tell you the reason. Then what about management accounting? Management accounting? Management accounting specifically focusing on the internal users, internal parties. Now, financial accounting means preparation of financial statements, right? Profit or loss statement or statement of financial position, what we call the balance sheet in the previous date, and then statement of changes in equity, cash flow statement, financial accounting aspects. Coming under financial accounting, organizations are preparing financial statements. Now, these financial statements are prepared. Think about a public listed company. When they prepare the financial statements, they are publicly available. They are putting it then into websites and Colombo Stock Exchange website. So it's publicly available. Anybody can see the financial statements. So financial accounting is basically mainly focusing on the external parties. External parties. But management accounting, it's very internal. It's very internal. For internal decision making, for internal information users, management accounting reports are prepared. So that is the main difference. Now tell me, why financial accounting prepares financial statements and they are publicly available, but management accounting reports are not publicly available. They are used for internal decision making. Why? What is the reason? What is the reason? Now tell me why financial statements are prepared and they are publicly available, and there's another branch called management accounting, and that is for internal decision making. Those are not publicly available information. These reports are not publicly available. Why? Yes. Right. Now I will discuss the difference between these two. Mainly, financial statements are prepared for parties who do not have a right to request the information they need from the organizations. So, financial accounting prepares general purpose financial statements. General purpose financial statements. There are so many parties who do not have a right to request the information they need from the organization, right? Now, the suppliers of the organization, can they call the organization and ask the profitability ratios of the company or the internal very sensitive information of the company? Can we call and ask? Now, let's say I'm not a owner or I'm not related to JKH. Can I call JKH now and ask what are their internal sensitive information? Can I call and ask? No. But they have to have the request, they have to have the information for some kind of decisions with regards to organization. For those people who do not have a right to request their specific information from the organization, companies are preparing general purpose financial statements and then they are publishing. That is for public listed companies, right? Private companies also, they are preparing financial statements, but just think about a financial statement. Those are very summarized information, right? Now, if we take revenue figure in the statement of profit or loss, it is a very summarized number, one number, right? But revenue considered so many aspects, so many components can be there, product wise, district wise, and then there are so many small, large, medium sized products, different things are there, but those detailed breakdowns are not shown in the statement of profit or loss. Only the revenue full figure is shown. So very summarized information is there in financial statements. That is for general purpose financial statements for external parties who do not have a right to request the information from the companies, just to tell them this is our revenue. But for internal decision making, think about revenue figure. Now, if we are selling our products island-wide and there are so many, let's say we have 10 products in our product portfolio, for internal decision making, we need to have a breakdown of those revenue figures, product-wise, district-wise, sales rep-wise, dealer-wise, right? Daily, monthly, biannually. Likewise, we need not summarized, detailed information. Those things are prepared in management accounting, right? Only summarized information provided in financial accounting, but detailed for decision making, internal decision making provided in management accounting. That's the difference. That's the main difference of financial accounting and management accounting. Now, this one, having learned financial accounting and management accounting, I want you to identify what is management accounting and what is cost accounting. What is management accounting and what is cost accounting? Blue color circle and then the green color one. Blue or green. What is management accounting? Large circle and the small circle. What do you think? Blue color one, large circle is management accounting. Yes, thank you very much. Exactly. Management accounting is explained in the large circle, whereas cost accounting is shown in the smaller circle, green color circle. This is the difference between management accounting and cost accounting. Now, as you can see, cost accounting is part of the management accounting. Management accounting is broader. Actually, management accounting started with the cost accounting. Cost accounting is the fundamentals, right? Cost accounting is there, that is the small circle, that is one part of management accounting. Management accounting is broader. So you need to know the difference between this as well. Now our course name is cost accounting. So that is why our focus is on cost accounting, right? Management accounting is broader. What is the difference? What is the difference between management accounting and cost accounting then? Why do we have two? What is the difference? Now, if I mention management accounting. Management accounting, now you know one thing, management accounting is to provide information for internal decision making with the internal information users. So, provision of information to people with the organization to help them make better decisions and improve the efficiency and effectiveness of existing operations. Maybe giving information. Yes, maybe giving information for budgets, giving information for planning the organization stuff, maybe to control or to evaluate the performance. It is very broader, management accounting. You will understand the difference when we discuss cost accounting. Now, if management accounting is the broader one, what is cost accounting? What is happening in the cost accounting aspect? Yes, cost accounting is basic. Yes. What is happening in cost accounting then? Basically, let's say we are in the manufacturing industry, when we are in a manufacturing company. When we are manufacturing our products, let's say we have a product called product A, right? Give me a second. Let me open an Excel. Right. Let's say we have a product called product A. Now, when we are manufacturing product A, basically we need to calculate the unit cost of product A. What can be the components? What are the major components in a product? Can I have the examples? Like, I don't want the ingredients as such, but main categories of components, cost components in a product costing. when we take the unit cost of a product, what are the main components we need to think of? Exactly, raw materials. So shall I write direct materials? Direct materials. So we have to take the cost of direct materials when we are calculating the cost of product A. What else? Exactly, labor. I will take direct labor. Direct labor, we have to think about the direct labor cost. Now, coming on direct materials, we have to think about what are the ingredients we are going to put, what is the quantity, how many liters, how many kilograms. Likewise, we have to measure it. We have to multiply it by the 1 kilogram price or 1 meter price. You get the cost. Cost for one product, one unit of product A. Direct labor. If we are using, let's say we are paying our laborers per unit. When they manufacture and finish one unit, we are paying 50 rupees. So that would be the cost. Let's say like that. So I'm saying 2 kilograms of that raw material, 1 kilogram is 1000 rupees. So in that case, how much is the cost? 1000 multiplied by 2, 2000. Direct labor cost, I will say we are paying laborers per unit basis. Per unit, we are paying 50. What else? What else? Another direct cost. Maybe we can say direct other expenses. Direct other. What is that? Direct other. Direct materials are there. Okay, direct labor cost is there. Direct other. Other means, let's say, do we have one participant coming from book publishing company? Coming from a book publishing company? Right. I will tell you the example. Now, if he or she is there, you can talk. Now, when let's say, if we have one unit, let's say we are producing product A, we have a very specific design for product A, right? That design was done by an external designer. We have taken that design and we are manufacturing goods. Sometimes when we are manufacturing this product A with that specific design, we have to pay for every unit we manufacture, we have to pay a certain amount to that external designer. What are those expenses? What do you call that? What do you call that? Exactly, royalty charges. So it's not direct material, it's not direct labor, but we have to pay for each and every unit you manufacture. You have to pay that designer fee for the external designer unit wise. So you can call that royalty, right? Correct. Direct other expenses. Let's say we have to pay 100 rupees. What else? What are the other things we need to consider when you are taking the unit cost? Now we have taken direct materials, direct labor, direct other. Yes, direct electricity, overheads, packing materials, exactly as you have mentioned. What are these things? You can call manufacturing overheads. Manufacturing overheads. Electricity cost, water cost, factory rent cost, storage cost. Maybe there are employees in the factory, cleaning staff salaries. Maybe there are security guards in the factory. We have to take their expenses as well. Maybe using water, internet expenses. Likewise, all these are overhead cost, right? Overhead expenses. So we have to take those things as well. Let's say product A, for one unit, we need to spend 200 rupees as the overheads. So we took them. If we take all these expenses together, all these costs together, 2,350, we have this amount. That means we were thinking of all the ingredients we want. We were thinking of the direct labor, direct other. What are the manufacturing overheads related to this product and all? We calculated the unit cost. What is this? What did I do? What is this process? What is this whole process? Is this management accounting or is this cost accounting? What do you think? This is cost accounting. Exactly. This is the cost accounting task. So simply we can say this is cost accounting. This is basically happening in cost accounting. Now there are so many other functions also coming under cost accounting. But basically cost accounting means, so we'll now go to the slides again. Cost accounting means capturing. So didn't we capture? We captured direct materials. We captured direct labor. We captured direct other royalty charges. We captured. And then we analyzed. We took ingredients as the direct materials. We took direct labor. We classified direct other royalty charges as direct other. And then we allocated the cost. We allocated for product A. We allocated electricity expenses for product A. We allocated factory rent for product A. So we captured, we analyzed and allocated cost related to the production of goods or services within an organization. That is cost accounting. So basically, when you are calculating the cost of a product, when you are calculating the cost of a service, that is basically cost accounting. So that is in the management accounting discipline. Management accounting is broader. Cost accounting is a small part of that management accounting, basically talking about the costing part. So when you have inventory in your manufacturing organizations, you have to value that inventory. How can we value the inventory? I have one point there. When you take inventory valuation, what are the costs we take? Do we take direct materials? I will copy these things. Do we take direct materials? Yes or no? Do we take direct materials when we are calculating the cost of our inventory? Yes or no? Are you guys sleeping? I know this is a Saturday after a hectic week. You have joined this short course and it's we have started at 8:30. Now it's 9:54. Are you tired? Are you sleepy? I want everyone to talk as much as possible. Maybe use the chat box or you can unmute yourself. I'm asking a very simple question. Do we have to take direct materials for inventory valuation? When you take inventory, what do you think? Yes, we have both answers. Yes, we have to take because inventory valuation means you are taking the value of your stocks, right? So direct material cost is there. Yes. What about direct labor? Do we have to take direct labor as well? Yes, we have to take the direct labor cost. But do you take direct other expenses, royalty charges expenses? Yes, we have to take. Manufacturing overheads. Do we consider manufacturing overheads as well? Yes, we have to take the manufacturing overheads as well. Then what about non-manufacturing overheads? Non-manufacturing overheads. What do you mean by non-manufacturing overheads, first of all? That means overheads are all these indirect expenses. That's true. Manufacturing overheads are all the indirect expenses related to the manufacturing function, manufacturing activities. That means if we are using a factory, rent paid to that factory, what about that? It is manufacturing overheads. If we are paying for water for the factory, water expenses, electricity expenses, and then what else? If we have security guards in that factory related to the manufacturing process, yes, manufacturing overheads. If we have cleaning staff in the factory, we have to pay them, cleaning staff. If we have machines and then we have to maintain these machines, machine maintenance cost, that would be manufacturing overheads. So all these overheads, indirect cost related to manufacturing. What are non-manufacturing overheads then? Can I have some examples for non-manufacturing overheads? Non-manufacturing, that means not related to the manufacturing process, but there are overheads. There are indirect expenses, not related to the manufacturing process. General security. Maybe let's say you have your factory in Ratmalana, your head office is in Colombo. Your head office is in Colombo, all the administrative work, all these things are happening in the Colombo building. You have a factory office, factory building in the Ratmalana. Now, what about office rent paid for Colombo building? What is the rent you paid for Colombo building? Is that manufacturing or non-manufacturing? The rent expense you pay for Colombo building. Manufacturing or non-manufacturing? Non-manufacturing. It is not related to the manufacturing process, no. So those are non-manufacturing overheads. But the rent you pay for factory building in Ratmalana, that is manufacturing because that is related to manufacturing process, manufacturing overheads. So these things, electricity bill of your Colombo head office, manufacturing or non-manufacturing? Electricity bill you pay for Colombo office, Colombo building, non-manufacturing. But the electricity expense you paid for Ratmalana building in the factory office, factory building, that is manufacturing. Likewise, you have manufacturing and non-manufacturing. If I ask, there are accountants in the Colombo head office, salaries paid for those accountants, manufacturing or non-manufacturing? Non-manufacturing, right? Accountants are in the Colombo head office, non-manufacturing, right? Likewise, you have to classify your organization's expenses as manufacturing and non-manufacturing. So I'm asking now, my question, there are non-manufacturing overheads as well, head office rent, accountant salaries, all these expenses, electricity expense for the head office building. Do you take all these expenses as well to the inventory valuation? What do you think? Do you take head office building rent, head office electricity bill, head office accountant salaries? Do you take all these non-manufacturing overheads also into inventory valuation? No. The answer is no. So you can say what you have learned is you are taking all these manufacturing expenses. That means direct material, direct labor, direct other, and manufacturing overheads. Total manufacturing cost you take for inventory valuation. You are not taking non-manufacturing overheads for inventory valuation. So what is this? What did we do? What did we discuss actually? Cost accounting. These are cost accounting aspects. These are the things we discuss under cost accounting. So I hope you are clear. I just want to give you an idea what is cost accounting and why cost accounting is different from management accounting. All these things are classified under management accounting, but cost accounting is a small part of it. We are talking about costing a product, costing a service, costing inventory, likewise. Okay. So I hope you have some kind of understanding about management accounting and cost accounting now, right? Okay. I have a small activity and it's 10 a.m. But ideally, I wanted to finish these activities before the break. I will give you a small break for 10 minutes. But within the break, maybe if you can try this activity. What are the differences between financial accounting and management accounting? We have discussed, but I have some aspects given. So think about what is the difference between financial accounting and management accounting in terms of these aspects. And we'll have the break and we will start at 10:10, right? Right. Hi, everyone. Welcome back to the session. Okay, I can see some of you have even given me the answers. That's really great. Okay, and we have the answers as well here. We can see. Okay, now we'll quickly go through the answers. We'll quickly see what are the differences between financial accounting and management accounting. Focused user group. Okay, the first aspect is focused user group. Now we have discussed that, right? I'm showing my answers in black color. External stakeholders. Focused user group is external stakeholders in financial accounting, whereas management accounting, we focus on internal parties, employees, owners, managers for planning or decision making or controlling activities that we discussed actually, external and internal. And then nature of the information. Now, if we say nature of the information, I want you to understand two things. Sometimes we have historical information, present information, and then the futuristic information. Historical, present, and futuristic. You can keep the answers, that's no problem. The blue color answers, that's all right. Thank you very much. Right? So we have those information. Sometimes we have non-financial and financial information. Non-financial and financial. Now, when it comes to the nature of information in financial accounting, as correctly mentioned, it's historical information. In financial statements, we always mention what has happened in the last year. Financial, historical, and it's financial. Financial, not non-financial information. Always we have a monetary value for the information we provide in financial accounting. It's financial information. But what about management accounting? It can be historic, that means what has happened in the past, and it can be current, what is happening at the present, and it can be forecasted, that means what will happen in future. Tell me the example for the forecasted information in management accounting. What is the most commonly applied report to show the futuristic information? Exactly, the budgeting. So there we have the budgets. We prepare budgets to show what will happen in future, futuristic information, forecasted information. So financial accounting, it's always about the historical information, whereas management accounting, it talks about past, present, and future. And financial and non-financial aspect, financial accounting is always financial information, but management accounting, non-financial information is also there. Can I have some examples for non-financial information? Non-financial information recorded in the management accounting reports. Yes, maybe quality, but with a number maybe. We are showing a number, but it's non-financial. Such an example. Opportunity cost means it will be financial because we have a monetary value. No, now we can't have a monetary value here. Non-financial. Exactly. Production quantity. Number of units sold during a past month. Now, do we show those information, non-financial production quantity and everything in financial reports, financial accounting reports? No. We are showing the monetary values. But when it comes to management accounting, we are showing the sales quantities, production quantities, number of employees working in the production flow, number of machines, number of days, number of hours. Likewise, so many non-financial information. You get the point? We have both financial and non-financial, both in management accounting reports. And then reporting entity. What about the reporting entity of financial accounting? As correctly mentioned in the answers, reports for the entity as a whole, entire organization. Do we prepare financial statements for a product? Do we prepare financial statements for a product, or do we prepare financial statements for a cutting department? Likewise, one department, P&L, statement of financial position for a department or a product? What do you think? If you keep silent, I will take that as a yes. No, right? Yes, no, we are not preparing financial statements for a product or for a department. But management accounting, of course, you can prepare reports for anything. It can be a product, it can be the whole entity, segment, department, anything, right? That's why reporting entity is changing. And then frequency of reports. What is the frequency of financial accounting? Now, it's true annually, but the correct answer would be periodically. We have a period. Periodically, we prepare financial statements. Most common period is annual. That's correct. Annually. But public listed companies, they have to prepare quarterly financial statements as well. So quarterly or annually, but specific period. But when it comes to management accounting, do we have a period as such? No, on demand by the management, when and where necessary, on demand by the management. Now, if I share one of my personal experiences in that one, before coming to University of Sri Jayawardenepura as an academic, I was working at MAS Intimates, Ratmalana, garment manufacturing company. So there I was working as a management accountant. My designation was management accountant. There, I was responsible for cash flow forecast. That means I have to think about the next month, and then I'm forecasting what are the cash inflows, what are the cash outflows, possible inflows and outflows for the next month. So by looking at the past months, by discussing with the teams, that means marketing teams, sales teams, I get their information. Maybe there are different orders, so outflow will be high to get the purchase, to get the raw materials, and there will be sales income coming from those new orders in the next months. Likewise, I talk with business teams and I talk with different other teams, maintenance department, because sometimes there can be a major development activity happening in the next month. So my cash outflow will be higher in the next month. Likewise, I discuss with all the teams and I prepare the cash inflows and cash outflows, anticipating for the next month. That was my task. That was one of my tasks. And then there was the COVID hit, right? COVID-19 hit. And then my frequency, what was the frequency of my cash flow forecast? Up to now, what was the frequency of my cash flow forecast? I prepared the cash flow forecast for a month. My frequency was month, right? Yes, monthly. I prepared the cash flow forecast for a month. But with the COVID-19, I had to prepare my cash flow forecast daily. My frequency became monthly, frequency became daily. Daily, I had to think about the next day. Every day, I think about the next day. What will happen tomorrow? What were the possible inflows and outflows of cash tomorrow? I can't think about the next month. It's not possible at all, right? It is that uncertain in this VUCA world with the COVID environment. So my frequency became monthly to daily, and then the on demand by the management, when and where necessary. If the management requests me to prepare a weekly cash forecast, I have to do that as well, right? Even though we don't know whether there will be lockdowns or anything, I have to do that. So on demand by the management, that is the meaning. That's the example I can give you, frequency. And then formats. Do we have a format for financial accounting? Exactly. Yes, we have a format, very standardized, as this participant has correctly mentioned. There are accounting standards, there are statutes and other regulations. It's very standardized. You can't change the formats of the statement of financial position or anything. But management accounting, there's no format as such. According to the management's requirement, it's very customized. You can customize. Financial accounting. Is it a legal requirement to prepare the financial statements? Of course, it's a legal requirement. It can be a private company, private limited company, or a public listed company. You have to prepare the financial statements. It is mentioned in which act? It is mentioned in which act? Preparation of financial statements is a Yes, Companies Act. Companies Act number 7 of 2007, it mentioned you have to prepare the financial statements. But what about management accounting? Is there a law? No, it's not a legal requirement. If you want to prepare, yes, you can. If you don't want to, you can, but there will be repercussions, right? Not legally, but you have to have your management accounting reports done for your business operations. Applicability of accounting standards. Do you have accounting standards for financial accounting? Yes. SFRSs, IFRSs, LKSs, all these accounting standards are there. But management accounting, no such standards, but there will be future developments. Sometimes general requirements, likewise including the general requirements, there will be accounting standards. But there can't be accounting standards like financial accounting for management accounting because it is very customized. Right, so those are the main differences between financial accounting and management accounting. And look at this one as well. What are the differences between management accounting and cost accounting? Now, you know the main difference. Management accounting is the broader scope, broad area. But cost accounting is all about getting the cost done for products and services, getting the inventory valuation done. So management accounting, we can say, encompasses a wide range of information, including financial and non-financial data. But cost accounting focuses specifically on cost data and related information, cost data, costing part. What is objective? Broad objective of aiding management in decision making, planning, control. The objective is very broad. But when it comes to cost accounting, narrow objective of determining and controlling cost associated with the productions and operations. Basically, costing. What is the output of management accounting? What are the outputs? One output we discussed, budgets. We prepare budgets and it can be management reports, performance metrics, forecast, budgets. There can be so many management accounting reports. What about cost accounting reports? Basically, it talks about cost sheets, cost control reports, inventory valuation reports, likewise related to the costing of products and services. So those are the differences between management accounting and cost accounting. Okay. Now, I have a question for you. Why do you think cost accounting has gained renewed interest in today's competitive business landscape? Why do you think cost accounting has become very important in today's world? Why do you think? You can unmute yourself and talk. Why do you think cost accounting has become very important in today's world? Very good. Competition, increased competition. Now, compared to businesses 25 years back, today we have intense competition locally, globally, right? With this globalization, intense competition. With that competition, each and every organization tries to reduce their cost. In order to be competitive, you need to have a competitive price, right? You need to have a competitive price. And also you need to increase the profit of per unit. To increase the profit, you need to reduce your cost. That means cost management, cost control, cost cutting is very important in today's environment with this competition. So in order to control the cost, in order to manage the cost accountant's role has become very important because cost accountant needs to know every single thing coming under costing, not just adding direct materials. Like say cost accountant is there, the production managers are there in the production. So can the cost accountant just ask what is the direct material cost? Take the Excel and write that. As I did in the previous example, you talk to the production manager and ask what is the direct labor cost. You take that cost and write that in the Excel. Just take the total, that is the unit cost. So as the cost accountant, you say this is the unit cost of this product. No, that's not the role you have to play as a cost accountant now. Cost accountant should know the components of the products, how to reduce it, how to reduce the waste, how to increase the efficiencies likewise. So that's why competition is playing a big role when it comes to the cost accountant's role. Cost management has become very important. And no, yes, customers having more clarity about prices of products now. Customers are very demanding now. They are not just buying things, they are comparing, they have social media, they know everything. Very informed customers are there. They are demanding. So with that, cost management has become very important. And also, the cost of utilities, cost of materials, cost of labor is going up. In Sri Lankan context, think about the utility cost. Now, in order to manage the profitability of your organization, you need to manage, you need to know the cost, how to reduce the consumption of water, how to reduce the consumption of energy, how to reduce the consumption of excess materials, how to reduce the waste. All these things are coming under cost accountant's role now, not just adding or just number crunching. We have to think about the strategic aspects as well. That's why cost accounting has become very important in today's environment. Okay, right. Moving on, this one. This is also a very new concept, I would say. Yes, I have another answer. Premium pricing is not an option. Yes, like premium prices, some of the organizations are tend to position their products as premium products, let's say. Now, it is catering to one type of customers. Now, in the world or even in Sri Lanka, there are customers who are going after premium products, right? If you take vehicles, if you take watches, if you take any product, they are going for premium products. For those kind of customers, that is okay. But for general customers, it would be not the case, right? It is a niche market, and for the brand, exactly. It is for the niche market. There's a market. Still in Sri Lanka also there's a market. But it is not happening always, right? That's why even those companies. So do you think when those companies are having a premium price, that means a higher price, no, compared to other prices, when they are targeting or when they are targeting a niche market and when they are charging a premium price, don't they consider about their cost structure? What do you think? So they can say we are charging a higher price, we don't have any issue. Cost is not a problem. We can bear any cost. Is that the mentality they have, or do they very concerned about the cost structure? They do. Even if they are charging premium prices, still they want to increase their profitability. They want to increase their margin. So that's why they are talking about cost. So every organization, whether it is a normal price, normal customers or premium customers, they are talking about the cost structure, right? Okay, that's good. That's a good point. Right, moving on to the next point, new developments in this area. I would say changing product life cycles. Now, look at this graph. In this graph, you can see long life cycle, long life cycle. I hope you know the product life cycle. Do you have any idea about the product life cycle, first of all? If not, I will show you the next slide just to show you the product life cycle, this one. Do you have idea about the product life cycle? Now, any product, it has a life cycle. Product life cycle, as we have a life cycle, any product has a life cycle, starting from the product development. Product development, you do the research, you do the development activities, you do surveys, you design the product development. And then slowly, we take the laser point. Product development stage. Now, slowly, you are introducing the product to the market. See this green color line? It's the sales, right? You are slowly introducing the product to the market. And then growth stage. Okay, your product is growing now. Your demand is growing in the market. You have more sales. And slowly, you are reaching the maturity level. Now, you introduce your product. Your demand has grown and then slowly you are coming to the maturity level. Now you are at the maturity level. After some time, what happens? Dropping, decline stage. This is the product life cycle. Any product can be like this. Now, tell me one product in Sri Lanka, very famous product, still in the maturity, but has not touched the declining stage. From the product development stage to introduction to growth, and still in maturity, but has not reached the declining stage yet. Exactly. This is the example I wanted to get. Sunlight soap. What about sunlight? For a long time, it's in the maturity, but not decline. What is the reason? What is the reason? Yes, they are using so many promotions, right? Extending the life cycle with promotions, redesigning. They are repositioning, they are positioning the market with. Now, what will happen to their maturity? What will happen to their daily sales if they do not use their commercials, TV commercials? How many TV commercials they are putting daily in on television, but everybody knows about sunlight, but still they are doing their TV commercials. They can just stop their TV commercial and everything now. They can stop their promotions because everybody knows about sunlight. Will they do that? No, they can't. Because if they stop it, their maturity won't last, right? Those promotions, those extensive promotions, they are redesigning, they are doing so many new things as well to the same sunlight soap, having the fundamental sunlight basic soap, they have variations as well. So those are the things, one important aspect. But that is a product life cycle. If they don't do that, product life cycle goes. Nokia, those are the Kodak cameras, those are the world famous examples for product life cycle. The products ended with the declining stage. Right. Now you have some kind of understanding of a product life cycle. Now let me go to the relevant slide here. Now, previously, years back, product life cycle was long. Products had a long product life cycle. Products had a long product life cycle. Let's say from R&D, research and development stage to declining stage, maybe 25 years. They usually took 25 years to go from the product research and development to the declining stage. But now what has happened? That product life cycle is now very short. Now it is very short. Now the products can't stay for 25 years in the market to go from the research and development to the declining stage. Within a very short period, within a very short number of years, products are introducing, quickly growing, reaching the maturity, and quickly declining from the market. What are the reasons? What are the reasons? Reasons are there in the side as well. Yes, as Mr. Manjul explains, because of the technology changes, new updates. First one is technology. When the technology is changing, the old product, the outdated products cannot stay in the market because there are new products with the new technologies. So that is one thing, technology innovations. And then intensive global competition. There are so many competitors out there and they are doing better things. If let's say we have the best product today, but tomorrow a competitor is coming, global competitor or a local competitor with a better product. So that's why our product is getting rejected in the market. So we have a very short life cycle in today's market. And then sophisticated customer demands as well. Now customers with the social media, with the education, they are very informed. Now they want the best products in the market, but at a lower prices. So with these things, again, our products are getting outdated in the market. That's what effect of social media, exactly. All these things are important. People are now having good knowledge and they also want to change. Exactly. That's what. Gen by Gen Z. Exactly. These are the things. These are the examples. Very good. So these are important. Now, what is the impact on cost accountant? What is the impact on cost accountant? Now, product life cycle, previously it was a long product life cycle. Now we have a very short life cycle. Now yes, more challenges are coming to the cost accountant. Now, cost accountant should understand that person should involve in developing new products, not the cost accountant. The company should come up with new product developments, new updates, new features adding to the current products, new so many promotions should be there. Likewise, into stay in the market, to survive in the market. All these things should be captured by the cost accountant. All these things should be costed, included in the product's cost, right? In order to sustain in the market, when the company is introducing new products daily, cost accountant should understand it, understand what are the costs coming, what are the promotional activities we have to do, what are the features we need to take, right? In addition to the basic features of the product, likewise, we need to do the costing. So cost accountant's role is challenging now. Challenging. Need to keep the costing in costing in control to recover. Exactly. So if the cost accountant doesn't do the job properly, that cost cannot be recovered. That expected profitability won't be achieved during the short life cycle. Let's say previously, now let's take an example. We spend millions for research and development when we are introducing a new product. We can't stop that, right? In order to introduce a good product, we have to spend some amount for research and development. And previously, we had 25 years to recover that cost. The development cost, the machines cost, and everything, we had time. We can slowly introduce, we can slowly grow in the market, we will reach the maturity. And by the time the product is getting declined from the market, we had stayed in the market for a considerable time. So we had time to recover our cost. But what about now? What about now? Now we don't have time to stay in the market. We have to quickly recover our cost, quickly achieve the profits we anticipated and decline from the market. So that is what happened. Cost accountant should understand this. Cost accountant should play a very important role in organizations. That's why we say it's not traditional now. Traditional cost accountants were just preparing the costing of products, just added what is included. No, that's not the case. We have to think about these important aspects now in today's environment, right? So do you have, I know that's really nice, your comments. I'm reading all the comments. It's really good. You have good understanding about this. Is this clear? Are you clear up to this point? Yes, thank you very much. Right. Okay. Now, that is another thing. So you have to speed up the changes, and also the cost accountants' role is getting important. Does your industry, one question, does your industry deal with short product life cycle or rapid innovations? What do you think about your organization? Reflect on your industry or organization. What about you? Are you providing a product or a service that is having a short life cycle, or you still in a long life cycle product? What do you think? What are your rapid? Yes. What is your product? What about the industry? If you want, you can unmute or you can chat in the chat box. We'd like to know the product you are dealing with. Okay, if you like, you can share. Others also, you can share. Is it a syringe? Yes, okay. So previously, maybe, yes, financial services, exactly. Now, financial services, previously, very basic financial services consultancy. There were no such variety in services, but now customers are requesting so many different things, I guess, right? You have to come up with new services, personalizations, exactly. Exactly. So for each and everything, now most of the time, cost accounting, we talk with products, no physical products, no. It can be done in services as well. Let's say in a finance company, financial services company, when you provide the financial services, for that service also you need to do a costing with the number of hours, with the type of professionals involved in that service, right? We have to do the costing part. So personalization, they want personalized financial services maybe. So you have to do the costing for that as well. Likewise. Exactly. Good. Thank you. Right. Another important thing. Now you know the product life cycle. You have an understanding. Now, previously, traditionally, cost accountants and overall organizations, they were focusing on introduction, like how to introduce your product quickly in the market, how to do well with the introduction, how to grow your product in the market, maybe to use advertising, promotions and all, and how to reach the maturity. Those are the things companies were focusing on. Companies were more busy thinking about the introduction, growth, maturity, and all. How to do well, how to get the sales for this product. But now in today's world, rather than traditional cost accountant, new cost accountants, we have to think about declining stage of the product as well as the product development. Now, these two stages are also important, even though we are not generating sales. The reason why traditional cost accountants and the organizations didn't think about the product development and the decline, there's no sales. As you can see, the green color line, sales revenue starts from introduction. So they are talking about introduction. They are not very much interested about the product development one. Product development was done by the production, that engineering part was done by the relevant people, but the cost accountant was not involved in that part, product development stage. That person, cost accountant, came to play from the introduction. Why? Sales are generating. Declining stage also, there's no sales, so cost accountant that person don't have a job, they don't have a role to play, but product is declining, that's all. But now we have to think about both stages, product development as well as the declining stage. Why? There's a new concept called life cycle costing. Life cycle costing, that means you have to think about the whole life cycle and do the costing for the whole life cycle, not the introduction, growth or maturity stages, right? Stages before and after the manufacturing is also important when it comes to costing. Now, when it comes to costing a product, what has happened in the feasibility study stages, product development stages are important. And also what is happening in the decline stages. Maybe if it is an electronic vehicle or a product, maybe e-waste, there can be e-waste coming. There can be some packing materials to be collected by the organization back after the consumption. Likewise, declining stage also, there are important aspects to be considered. So that's why it says traditional cost accountant has given less focus on product development disposal, but the new cost accountant should focus on these two stages as well. I will tell you the reason why. Now, look at this graph for a moment. Try to understand by looking at the graph. What is included in this graph? Yes, meantime, I was reading the chat box. It is better the cost accountant to get involved from the inception and exactly that's what I tell you. That's what I discuss actually. Cost accountant should not come in the middle of the discussion. Cost accountant should be there from the very beginning. Otherwise, no point of getting the costing done. Can't do the costing done correctly, to be honest. Right? Okay. Now we'll look at this one. Here it says, with this graph, this is a percentage of cost committed or incurred, this line, and then product life cycle phase. Now we have two phases, design phase of a product and then manufacturing and operations phase. That means after the designing, manufacturing it, distributing it, the sales stages. Design stage, when you look at the design stage, this yellow color line, when you go along with this line, 80% of the cost of a product, 80% of the cost of the product, that means majority of the cost of a product is committed in the design stage. That means 80% of the cost of any product is decided and committed in the design phase. You don't have to wait until the product is getting manufactured. Before that, we know the cost coming in future. We know the cost coming in the manufacturing stage. We know the cost coming in the sales stage. We know the cost coming in the after sales stage. So 80% of the cost is committed and decided in the design phase. Balance 20% will be committed in the manufacturing and operations phase when you go along with the manufacturing, right? So most of the cost, majority of the cost decided and committed in the design phase itself before you even manufacture the product. But look at the blue color line. Only 20% or lower than that of that cost is incurred in the design phase. You are spending compared to the manufacturing and sales phases. You are incurring a very small amount in the design phase, no? Feasibility studies, development studies. So you are spending only 20% of that decided cost. Balance 80%. Majority of the cost will be spent in the manufacturing phase. So even though you spent 80% or majority of the cost in the manufacturing stages, later stages, that has been decided in the design phase. Do you get my point? Even though you spend later, all these costs have been decided and committed in the planning stage, design stage. Yes. Now, if we take one example, all right, I will explain again with this example. Now, let's say we are building a house. We are building a small house. That is only one story house. We have one room, living area, and the kitchen. That's it. Very small house. Now, yes, I hope you can see the Excel. Now, let's say this is the plan. This is the plan. Now, this is the room. This is the kitchen. I'm not good at planning, drawing a house plan. This is the kitchen. This is the house. This is the living area. Now, we need to have a door for this house, right? Let's say this is the door, this part. I'm just drawing to show you. This is the door. Door is here. And we don't need windows for the living area. Or maybe we can put one small window here. One small window. Let me draw that. One small window here. I will draw the door as well. Okay, this is the door. We will put one small window for the room as well. Okay, this is the window of the room. Kitchen, no need of windows. No need of windows. Right. So we have two windows for the whole house. We have one door. This is our house plan. Right. So this is we are in the planning stage, right? We are in the planning stage. When we are planning our house, we decided to have only two small windows for the whole house and one door. That's it. This is the whole house plan. Now, what about the electricity expense? Electricity expense after we construct this house. When we go to this house, when we live in this house, what will happen to our electricity expense? What do you think? Low electricity expense or a very small amount or a high amount? What do you think? Assuming that house is in Sri Lanka. Imagine this is a very small window. Very small windows. Electricity expense will be very low or high. Think about the ventilation we are getting. Think about the ventilation we are getting for this house. Now, okay, I will remove this window as well. Maybe you are thinking this is a very small house, no need of window. I'm removing the window in the living area as well. Now, what do you think? What about the electricity expenses in this house? Exactly. We need 3 fans. One fan for the kitchen because there's no window in the kitchen. There's only one small window in the room. So definitely we will have to put AC, right? AC, oh, no window means no ventilation, no airflows. We need lights, right? We need to put a fan. Living area also, there's no window in the living area. We will always have to put lights. Only the door is there. So we will have to put lights and ACs and fans. What about our electricity expense? It would be very high. It would be very high. Do you get my point? Does that make any sense? If I say the electricity cost would be very high, every month you will have to pay a very high electricity bill because of the AC, because of the lights. Always you have to put on the lights. Am I clear? Exactly. Right? Yes. So I hope I'm clear. If not, just ask me. I can explain. Yes, will increase. The electricity cost will increase. So at the design stage, you decided not to have more windows or more ventilation into your house. You decided not to have a single window for your kitchen. You decided only one window for the room. You decided no windows for the living area. You decided it. At that time, even before you construct your house, at that time, you have committed, you have decided for a higher electricity bill in coming years. So monthly, you will have to pay a higher electricity bill because in the planning stage, you have decided and committed that higher electricity cost. Am I clear now? Am I clear now? Now, in an organization also, when you are designing a product, at the design stage, you have committed everything. You have decided the type of raw material you need, the whether you are taking it locally, whether you are taking from other countries, right? Whether you are importing the products, whether you are taking trained employees or not untrained employees, whether you are taking any royalty, whether you are using environmental friendly packing materials. Likewise, you are deciding everything in the design phase, right? Also, if you add more feature into this house, such as mini pool, rooftop, wooden flooring, exactly. So that's what I'm saying. Designing stage is the most important stage. Designing stage is very important. After designing, you can't change anything. Design stage, you have designed, you have decided everything, you have committed the cost. So I'm saying if the cost accountant is not getting involved in the designing stage of a product, and then he's coming to the meetings after the sales have started, can that cost accountant do anything for the cost management, or just he or she has to report what is going on? Can make decisions or cannot make decisions. At the sales meetings, you have started sales, you have decided everything, you have manufactured, now you are starting sales. At that time only finance is coming, cost accountant is coming and sitting with the meetings. Now cost accountant is having power or hasn't have power to decide anything, to change anything, to control, to manage cost? No, because everything is done in the design stage. So that's why Cost accountant should involve with all these product developments from the beginning, design stage. So make sure in an organization, if you are in the cost accountant, you have to be a part of this product development from the beginning. Then only you will understand, okay, the amount of kilograms, the amount of meters putting into there, the wastage, how to increase the efficiency and all, because you can't do anything after in the manufacturing stage. You can't do anything. You can do only simple things. But design stage, you have to play a bigger role. That's what this graph explains. 80% of the cost is committed or locked in, decided in the very beginning. After that, you are spending. So that's why it says costs are not managed when they are reported in an accounting statement. You can't manage cost when you are reporting. You are reporting what has happened. They are managed when decisions are made by management related to the place, method of manufacture, type, source of material. That's why now, obviously, when you check two costing reports or compare with other previous years, you can get some kind of understanding about the cost and manage cost. But I'm saying that's not the cost control we are expecting. We expect cost and management accountants to work from the beginning and then understand it. Then from the beginning, you have to be part of the journey and you can manage the cost. So that should be the case actually in an organization. So if you are in a higher position, let the cost accountants to come and join your meetings. Let them talk. Then they will understand. They will give you suggestions how to reduce cost and everything. Why not chief cost management officer position not commonly seen in the part of the world? Exactly. Yes, chief cost management of that is why with these new developments we are showing cost accountants importance, the importance of this cost accountant. So I hope that's clear with this examples, isn't it? That's important. It should be a C-suite position. Okay, so do you have any doubts in this example, in this concept? A very important concept. Do you have any doubts, any clarifications? I hope not. Okay, all good, thanks. Right, so that's what these are new developments in cost accounting. Previously, cost accountant was just preparing the reports, just taking the calculating the value of inventory. Likewise, just reporting. It's not like that now. We have to play a strategic role. Now here we have one video. This is for like homework kind of thing. I have the link pasted in the slide and I have shared that as well. You can watch this video. It's about fast fashion industry. Now we were talking about product life cycles. Now if we take fast fashion industry, their product life cycle is rapidly changing. You will see that video, very interesting one. Think about the product life cycle in that fast fashion industry. What is happening there? What are the hidden costs of that fast fashion industry? Now, garment manufacturing companies, they are doing their manufacturing and everything. That's true. They are coming up with new fashion designs, new styles and everything. That's there. But the other part of that story, hidden cost in that journey, life cycle, maybe incineration, landfilling, when the fashion is moving, consumers don't want old-fashioned stuff. So what is happening to that old-fashioned manufactured items, right? Go to landfilling or incineration. So those are the hidden costs in this industry. It's a very interesting video. You can watch and understand. I'm not going to play here because of the time. Right. And then the impact of IT. I would say impact of IT is very important when it comes to cost accounting as well. Now, traditionally, we were using Microsoft Excel and we were calculating everything. Still, we are using Excel, that's true. But when you are using Excel, don't just use the fundamental functions, VLOOKUP, HLOOKUP. Now, previously, those were the important, the advanced things. Yes, I will share the link. You can check that. You can see that in the shared slides as well. Let me share the link in the chat. That's easy. Yes. So we were using Excel, as I mentioned, right? It's better to not HLOOKUP or VLOOKUP. Those were the macros and everything, but those are not the that's not the limit of Excel. If you are using Excel, use it appropriately. There are so many things you can do with Microsoft Excel. And not only that, there are, apart from Excel, there are so many advancements in IT happening. Internet of Things, ERP systems. Please let me know, if you are using ERPs for cost and management accounting stuff in your organizations, because most of you are working in finance division. There are so many things we can do with ERPs, right? SAP, and then artificial intelligence. Now, if we take AI, we will discuss in the budgeting session. AI can do better things, right? With this big data analytics, when we give all the information, trend analysis, identifying the trends, identifying the anomalies, everything we done by AI. That's very good. That is very important for organizations to adopt AI for better management, because we can't analyze all the numbers, but AI can do it within seconds. So AI, machine learning, blockchains, all these things are very important in cost accounting. Now, having discussed AI has a good, strong impact on cost accounting, will we lose our jobs? What do you think? If AI can do everything, if machine learning, blockchain is also there, if they can do everything for us, will cost accountants or management accountants lose their jobs? What do you think? Not losing. Why? Why aren't we losing our jobs? Why are you so confident about that? Exactly. That's the words I wanted. We will lose for someone who can use AI better than us. We will lose our jobs. Cost accountants and management accountants will lose their jobs for someone who can better use those IT advancements. If you don't know how to use AI, you will lose your jobs for someone who knows how to use AI in your business organizations. So that will happen, definitely. So that's why it's important to understand these things, how these things work. And also these AI and everything, they can do routine tasks. That is also one thing. New technologies perform the routine tasks, preparation of reports, analyzing, recording, all these things. But that advisory aspect, consultancy, that strategic aspect, that will be taken care of by the humans, right? Advisory aspect, consultancy. That's why it says cost accountant should play a strategic role now, not just the reporting person, not just reporting and preparing reports, because that can be done by AI, that can be done with information technology aspects. But now cost accountant should play a strategic role in the organization. As we discussed earlier, from the beginning of the product life cycle, a strategic role should be played by the cost accountants. That's how we can secure the jobs, right? And then look at discussion. So in your view, how has the role of accountants evolved in your organization over the past 5 years? Now, we discussed cost accountant should not be a traditional person. That person should play a strategic role in the organization, should involve from the beginning of the product life cycle, right? These things we discussed. Now, what about your organization? What about your organization? What is happening? Very good. That's nice to hear. More in strategic position. Very good. More strategic. That should be the case. Now think about your organization as well. If your cost accountant, management accountant is not playing a strategic role, that's a problem. That would be challenging. So that's why you have to, like, if you have teams, if you are working as a team member, you need to come up with these ideas to the management, right? Showing the importance of getting the cost accountants, management accountants to strategic roles. That's important. Right now, it's nice to hear, but only two of you are saying strategic role. I don't know with the other. I don't know about others. Right? That's important. Okay. So with that, what new competencies must cost accountants develop with regards to this information technology impact? What are the new competencies the cost accountant should develop? If I show you the answers, data analytics, exactly, data analytics, relationship building, because strategic role, not just reporting. So you have to have relationship building skills. That's very important. Data analytics, visualization, storytelling. You should be able to tell a story, actually. That's where products or new products are coming to play. Creativity happens there. Strategic thinking, not just about the costing side. Strategic thinking, you have to think about the whole organization now, not just preparing reports. And then understanding automation tools. You have to be very thorough with all these technical aspects: ERP, Power BI, BI platforms, AI, machine learning, IoT. If you are not familiar with these kind of aspects, you will lose your jobs for someone who performs better. And also business partnering. That is important because finance functions in most big organizations. We don't say finance function now. Finance partnering. You are partnering with business teams. You are partnering with other teams to collaborating each other to make better decisions. Not just finance division, marketing division. Likewise, we should not have separate divisions. Always business partnering should be there, right? So those are the things you need to come up with in the organization when it comes to cost accounting. Exactly, lean management, collaborations, aware of live market trends. Exactly, those are important when it comes to cost accounting. So with that, don't leave. With that, we are ending the part 1 of today's session, right? With the introduction, we spent 30 minutes for the introduction as well. No, that's why I'm finding it difficult to complete within time. We have part 2 as well. So we'll quickly move on to part 2. Don't worry, we have 6 Saturdays. Even though I can't finish today's content within the day because of the introduction sessions happen today, I will complete the part 2 in the next session as well. So let me start session 2. So before moving to session 2, that means part 2, do you have any clarifications? You have any doubts? If you have, you can ask. All good? Right. Okay. Okay, fine. Thanks. Now, moving to actually, we didn't have any computations or mathematical questions or anything in the first part because I just wanted to give you some idea about the cost accounting and more specifically the new trends. Cost accounting is not just what we actually do, what we have to do. There are so many things we have to do. You playing a strategic role. So that's why I spent some time there. I think that's important to understand our role before understanding these concepts and techniques. So that's why I spent some time there. So now in the part 2, we are discussing cost terms and classifications. Now we are coming to basics in cost accounting. As cost accountants, whether we are playing a traditional cost accountant's role or a strategic role, doesn't matter. We need to be perfect or we need to be very good in our fundamentals. So that's why cost terms and classifications. Again, I think you have learned these things before. I'm just refreshing your memory. So at the end of this session, at of this part 2, you need to define cost object and then you can classify your cost. Now, remember, there are so many types of classifications in cost accounting, but I have used only few of them, right? Only few of them. So this is a very short course now. Our course name is also short course. So that's why I have selected only few. There are so many other classifications, so I'm not discussing them here. First of all, what is a cost? That is a very easy question. What is a cost? Monetary value of the resources sacrificed. Now, if I show you the previous example, this is the cost of our unit, 2,350. So how did we get the cost? We have all the resources. We took the resources sacrificed to produce product A, direct materials, direct labor, direct other manufacturing overheads. All these are resources. Monetary value of these resources is the cost. That's the meaning of cost. Monetary value of the resources sacrificed to achieve a specific objective. That means to manufacture a product, that is the cost, definition for cost. And then cost object. What do you mean by a cost object? You need to know cost object. Now, there's a misunderstanding there. So many, like, we think cost object is always a product. We think that cost object is always a product. It's not the case. Cost object is anything for which cost can be separately ascertained. Sorry about this. It should be separately. Anything for which cost can be separately ascertained. That is cost object. Now, can I have an example of cost objects in a hospital? Anything for which cost can be separately ascertained, that will become a cost object. Cost object. So I'm asking, what are the cost objects in a hospital? Think about a hospital. Now, it's like this. Cost objects are not cost items. Cost objects are not cost items. Let's say direct material cost. It is a cost item. Direct labor cost item. The amounts you pay for a doctor, that would be a cost item. I'm asking cost objects. Now, if I take one example before asking you, in this short course, right, let's take this CMA short course. Cost object, one cost object would be the total CMA short course. Total CMA short course would be one cost object. So that means, can't we take the cost of this CMA short course? Can't we add all the cost elements and take the cost for this CMA short course? Can or can't? We can, right? We can. Think about a university. Think about a university before talking about a hospital. Think about a university and let's say, can't we take the cost of a degree? Let's say there are 10 degrees offered by a university. Can't we calculate the cost of one degree? Yes. If so, that degree would be a cost object. That degree would be a cost object. Think about a product, MAS Intimates, garment manufacturing company. Can't we take the cost of one particular garment? That means one t-shirt manufactured in MAS. We can add all the cost items, spend for that t-shirt manufacturing process, and we can take the cost of that t-shirt. That t-shirt is a cost object. Now, likewise, tell me, what are the cost objects available in a hospital? If I take one example, one surgery done in the hospital, can't we take the cost of that surgery? Can't we take the cost of that surgery? If we have to bill for the surgery, we have to take doctor's fee. If there are consultants, special consultants coming for the surgery, consultant's fee, medicines fee, and then there are equipments used in the surgery. So depreciation of that equipment, depreciation cost. Electricity is used. AC rooms will be there. So electricity cost for that surgery. Nurses will be there. Nurses cost. Likewise, you take all the cost together and then we take the cost. So surgery would be one cost object. Anything for which cost can be ascertained. Likewise, another example. Can't we take the cost of the X-ray room for a particular month? Can't we take the cost of a X-ray room, cost of the X-ray room for a particular month? For a particular month to function that X-ray room, what are the costs we need? So when we take all these cost items together, cost of that X-ray room. Complete checkup. Complete checkup is one service provided by the hospital. So when we take the total cost of that complete checkup to be billed to the patient, you can take one by one line items, every cost incurred for that checkup, take the total, that is the cost object. So checkup becomes the cost object. Surgery becomes the cost object. Can't we take the total cost of the hospital for a period? Can't we take the total cost of the hospital itself for the period? Yes, we can take. For the period, what are the cost items spent for the hospital? So for that period, hospital becomes the cost object. Radiology, exactly. Departments like ICU. ICU, to function the ICU for a period, what are the items, cost items we need? So ICU becomes a cost object. One cost object. You can take the cost of ICU. So cost of product, cost of department, cost of a service, cost of anything for which cost can be ascertained, that is a cost object. So that is the meaning of cost object. Now, look at this one activity. Identify 3 possible examples for cost objects of a garment factory. Do that activity. Identify 3 possible examples of cost objects of a garment factory. In a garment factory, what are the cost objects available? What are the things we can take the cost? Cutting room, exactly. Now there are, let's say, we have 3 departments in the garment factory. Let's assume that cutting department, sewing department, packing department. So can't we take the cost of cutting department? If we add all the cost in that department, we have to pay the salaries, we have to give electricity for that department, we have to maintain the machines in that department, we have to clean that department, right? We have to pay rent for that department's building or area. When you add all these cost items together, cutting department becomes one cost object. Can't we take the cost of a garment manufactured in the garment manufacturing company? Dress, t-shirt, or a skirt. Let's say skirts are manufactured in that garment factory. So can't we take the cost of a skirt? Can't we take the cost of a t-shirt? Cost objects, right? Cost objects. Exactly. Yes. So shall I show you the answers? That's easy. See, garment, one garment. In that garment, what are the cost objects available? A garment item. We can take the cost of a trouser. We can take the cost of a t-shirt. A division. We can take the cost of a cutting division. We can take the cost of a sewing division. We can take a cost of a special order. Likewise, these are the cost objects available. Think about a university. Think about a university. Here, a student or a student here to, let's say there are 4 years for a degree program. So from the very beginning, first year to the 4th year, to manufacture or to release a graduate to not manufacturing, to release a graduate from the university, what is the cost? What is the cost? So in a government university also, to produce a graduate from a government university, what is the amount the government is spending? So in that case, one student becomes the cost object. We can do the calculation for that. 4 years, how many lectures, what is the cost? Think about a batch. If you take the batch of a student, we can take the cost related to that batch and take the calculation. Cost object is the batch degree program. As I mentioned earlier, 1 degree program, we can take lecturer's fee, materials fees, tutors fees, maintenance fees, lecture halls rent allocated for that degree program. So we can take all these expenses and then we can take the cost of that degree program. So cost object is a degree. Are you clear? Are you clear about the cost objects? Now, what I want to highlight is there's a misunderstanding that every time product is the cost object. No, product can be a cost object. In addition to that, one division is also can be a cost object, right? A cost object is anything you want to know the cost of, like how much does this cost? That thing is, yes, exactly. That thing is a cost object. If you want to calculate the cost of a t-shirt, cost object is the t-shirt. If you want to calculate the cost of the cutting department, that thing is the cost object, right? Likewise, there are so many cost objects in any company. It can be a garment, it can be a university, it can be a furniture manufacturing company. Let's say one furniture item would be the cost object. One division, if you take the cost of finishing department, cost object would be the finishing department. Likewise. Now, what are the key cost objects in your organizations? That is what I wanted to know. What are the cost objects in your organization? When you're typing the answer, tell me your type, the industry at least, and then what are the cost objects in your organization? Now, there were participants coming from banking. Yes, banking. What are the cost objects in a bank? What are the things? Yes, we can take the cost of a branch. So that would be a cost object. If we want to calculate the cost of a branch, that is a cost object. Yes, one service, let's say a leasing facility. If you want to provide a leasing facility, cost of that facility, that would be a cost object. Tea industry, cost of the whole tea bag gourd, exactly. Tea industry, that is a very interesting one. There are factories, right? If you want to calculate the cost of the factory, that would be the cost object. Yes. Yes. Thank you. So those are the cost objects. Think about the cost objects in your organization also. Ticketing industry, business class reservation. Exactly. Now, when you have if it is a ticketing industry, are you charging for the service? Like, yes, you can charge for the services you are providing. So when you provide one service for the customer, you can take the cost of that service. By adding all the line items applicable to that service. So in that case, cost object would be that service. Right. So in that case, you can think about your cost objects in your organization. What are the things you can take the cost? If you want to take the cost of something, that would be the cost object. Anything for which cost can be ascertained. Not only simply the products or services, it can be anything. And then moving on to the classifications of cost now. Now, I told you there are so many classifications of cost. Direct, indirect, variable, fixed, semi-variable, step fixed, relevant, irrelevant, sunk, opportunity, incremental. Likewise, there are so many classifications. I'm moving to the first classification, direct and indirect. What do you mean by direct cost? Direct cost means if you take a cost object, now not a product, if you take a cost object, if you can directly, specifically, exclusively identify the cost to that cost object, that is direct cost. And if you take a cost object and you can't directly identify that cost to that cost object. That would be indirect cost. So remember, when you classify cost as direct and indirect, first of all, you need to know what? What do you need to know? Before classifying cost as direct and indirect, you need to know what? You need to know the cost object. If you don't know the cost object, you can't say whether this cost is direct or indirect. Let's take an example. Let's take a university, private university. Let's take a private university. Now, if I take one degree program as the cost object, what about lecturer fees? What about the lecturer fees? Direct. In that degree program, lecturers are coming, number of hours are, we can specifically identify the number of hours spent for that degree program. You can multiply it by the hourly rate, direct cost. If we take one student of that university, what about the lecturer fee? Is that direct or indirect? One student of a university. What do you think? Lecturer fee? Can you specifically identify the lecturer fee per student? Is that possible practically? It's not. So lecturer fee, depending on the cost object, lecturer fee would be direct or indirect. Do you get my point? So in order to classify a cost as direct or indirect, first of all, you need to identify the cost object. If you don't know the cost object, you can't say whether it is direct or indirect. So that is one misunderstanding. Sometimes we always say direct material cost is direct. No, it can be indirect sometimes based on the cost object, right? Okay, that's good. So I hope that's clear. That's why I wanted to tell you the difference between cost object, the importance of cost object. So likewise, if you can take the cost directly, direct. If you can't, indirect cost. So you have that understanding. This classification, that one we actually discussed. Cost, if you classify as direct and indirect, one indirect cost, we can say overhead cost as well. Overhead cost means indirect cost. Overhead means indirect. So direct cost you can classify further as direct material, direct labor, direct other. So when you do computations, that is important. That's why I'm showing you the classification: direct material, labor, and other. Indirect cost, indirect cost can be two types: manufacturing overheads and non-manufacturing overheads. Now, indirect cost or overheads, no. Manufacturing and non-manufacturing. Manufacturing overheads can, even though I have not shown here, what are the classifications coming under manufacturing overheads? What are the things coming under manufacturing overheads? Overheads means indirect. Manufacturing overheads means direct or indirect. Indirect material, indirect labor, and indirect other. Indirect, exactly. Indirect materials, indirect labor, indirect other, manufacturing overheads, and non-manufacturing overheads. Now, I told you in the previous example, overheads can be there, sometimes manufacturing related, sometimes non-manufacturing. So, non-manufacturing overheads are there. What are the examples we discussed? If we have a factory at Ratmalana and if we have the head office in Colombo, rent paid for Colombo building would be non-manufacturing overheads. Rent paid to factory building would be manufacturing overheads. Likewise. So manufacturing and non-manufacturing. Look at non-manufacturing overheads. We can further classify non-manufacturing overheads as admin expenses, selling and distribution expenses, finance expenses, and other expenses. Where do we put all these expenses? Where do we record all these non-manufacturing overheads? Usually, where do we record? We record in the P&L, profit or loss statement, right? We record all these admin expenses, selling and distribution expenses, finance and other expenses in the profit or loss statement when we are preparing the profit or loss statement. See? So that's what I mentioned. What are the things we consider for inventory valuation? What are the costs we consider for inventory valuation? By looking at the names in this classification, you can tell me. What are the things we consider for inventory valuation? Do we take direct materials for inventory valuation? Yes. Do we take direct labor for inventory valuation? Yes. Do we take direct other for inventory valuation? Yes. So all the direct costs are considered for inventory valuation. Do we take manufacturing overheads for inventory valuation? Manufacturing overheads. I'm asking, do we take manufacturing overheads for inventory valuation? Yes, we take. Why? We take all manufacturing expenses. Whether it can be direct or indirect, we take all manufacturing expenses into inventory valuation. But do we take non-manufacturing overheads? No. So where do we record them? We record them in the P&L as expenses. That's how we classify cost. All manufacturing costs are going for inventory valuation, manufacturing cost. All non-manufacturing overheads are going for P&L as expenses. So here you can understand that difference. Yes. Okay, now this activity is there. Activity 2, identify direct and indirect cost of a furniture manufacturing company, assuming that the cost object is a chair, and then you can classify whether it is material, but that means direct material, indirect material, direct labor, indirect labor, direct other, indirect other, like this. And then Activity 3, I have not shared the answers with you, so you have the activities. And after that, you can classify whether these material, labor, other expenses are manufacturing or non-manufacturing, right? Manufacturing or non-manufacturing. So you can do that activity if you find time, just a matter of understanding the direct and indirect cost. So since I'm running out of time, 11:35, right? I'm running out of time with the introduction we did. I have some other classifications to discuss with you. I will be covering those parts in the next session, right? So we can manage time like that. Thought of winding up now because of the time. So you can do this activity and we can discuss. Definitely, we will discuss these answers in the next session. Right. So do you have any doubts at the end of the first session? Do you have any clarifications? I have shared the presentation slides. I hope you got the email coming with Miss Shanti. Didn't you receive the learning materials? Yes, received, right? Do you want me to share in the... yes, let me share it now in the chat box as well for your reference. I think she has emailed you. Yes, recordings will be shared. And I think recordings will be available for a short period. So you better download the recordings. Once she sends the recordings. Okay, now I have shared the slides in the chat box as well. You can download. Yes, recordings will be emailed to you. And the documents I have uploaded now in the chat box as well. And I think you have already received as well. Next study week, yes, I have shared the materials, but I will ask to send you sooner. Yes, I will email those next week materials as well. Actually, next week will be taken by Dr. Nuwan Gunaratna. I'll be coming in the week after, but he will definitely share the materials in advance. Then you can go through the materials and come to the session. That's great. That's really great. Okay, so if you have any doubts, you can tell. And if my speed is not good, if I'm too fast or you can't understand things, just let me know. So we have 5 more weeks to go now, so we can have a better session in that case. So you can provide me a feedback if you want. Right. Okay. Thank you. So if you have clarifications, you can always uh, tell. Then we can have a very fruitful session. And I want you to talk more. Then you can share your experience maybe in coming weeks. This is the first week, no? Right. So in that case, I'm winding up. Thank you very much. We'll see. We'll cover these things. And at the end of the course, you will have a better understanding about cost accounting. Thank you very much and have a nice weekend.